Okay. G'day, Pete. How are you, mate? I'll see who else is in today. It'll probably be a fairly quiet. We've got a public holiday tomorrow. Everyone will be battening down for the races, won't they? And just let me know if I'm coming through. Okay, my stream looks really bad. The speed, so it's the internet. We're playing funny buggers. I don't know why. Should not be anywhere near that slow. Am I coming through okay, Pete? You're seeing. You can see on the streaming if anyone looks. That number there. See, it's jumping around quite a bit. Should be around the 2,000 mark and constant, not just up and down like a yo-yo. So someone's messing with my internet. Oh, we'll see how it goes. Now, Pete, did you get onto that short on the Hang Seng? Oh, hopefully you did. There was good slippage too, so it turned to 47 points, I think. I ended up getting in the end, so it was really good. That was on the Hang Seng. What's going on? Something's not quite. I'm seeing it's really slow. Okay. Yeah, I placed it basically on the second. It sort of popped up for about a few seconds, and then I placed it, and then it slammed down through that low, and you can see the index itself was actually opening and going down. Well, it was opening lower. It was opening a lot weaker. So sometimes when they do that, it can gap down on the open. It can really start to flush, and the market's always looking to flush traders back out and put them on the sidelines, as we always mention. Yeah, and it gapped down hard, so it was great. You know, if you got onto it. All right, let's get into it. So welcome to Trade the Structure. You'll see my pretty face on the screen there, hopefully. I'm just going to refresh my page. It seems to have settled down now. Be a sec. Yeah, we look good. We look good. It's settled now. All right. So welcome. Yeah, we're going to talk about today. I want to take a look at the bonds. It's namely the US bonds. I don't really have the 10-year bonds up, but I know they're starting to point towards rate rises too. We've got the RBA tomorrow at 2:30. The statement. It's the first Tuesday of each month. They'll come out. So, and then I think there's the US Fed Reserve this week as well, and I think not the ECB, Bank of England, so BOE is this week as well. So there's a bit of a consensus we're getting closer across the board, and it seems to be I'm not surprised at anything, but collusion between the central banks to not to go it together. No one stepped forward, and apart from Canadians, and the New Zealanders, they went and I think the Kiwis raised rates. So it's kind of like, well, there's inflation everywhere at the moment, and it comes down to how long the central banks can hold off raising rates and turning the tap off, basically. Taps are still full blast out. The Fed in the US, well, the US Fed Reserve just talked up tapering, but at this stage, that's all they've been doing. I think they're trying to ease the market into it. Markets are starting to suggest that we're getting closer. Obviously, we're getting closer, and it could be sooner rather than later. Sooner tapering, but with regards to rate rises, I think they're still factoring in 2022, maybe early next year, because I think it's not only that, and there's a good article you can read. You can read anything, but it's not only that you've got what are we saying? Tapering going to hit. It's not that. It's not that what I'm talking about. US. Oh, I had a brain freeze there. What was I going to say? Really just forgotten. Not the US the Fed Reserve talking about. Oh, that's right. That inflation is temporary or inflation is transitory. It's not so much that. It could be that there's massive amount of sort of pent up, consumer, um, I guess, demand for everything. They've been in lockdown for a while. Everyone wants to get out and about. So if that pent up demand and people have been saving potentially as well, that could flood into the market. And even if supply chains start to ease and everything starts to come out, you've got a massive pent up consumer that's ready to go, which could really start to kick on. Is everyone on the stream coming through okay? It's jumpy. It's never this jumpy. It's still... So if it does break up, it'll filter through. Okay, I can see the numbers that are coming through. It's good. So you're probably going to see it after the fact anyway. Yeah, internet. You can never... Got good internet too, really fast internet, and it's just intermittent. Anyway, let's push through. If you do have issues and you've missed something and you want to talk about it again, just send me an email. Trade the structure at gmail.com. Anyway, so yeah, that's still okay. That's good, Pete. So I still think there's quite a bit of built up consumer demand that ready to jump into the market. So was that the Hang Seng? That was a Hang Seng gap down. That's a 30-minute anyway. So see that massive. It's getting pummeled at the moment actually. So that was a chart. That was a level, taking it through there, and you can see bang straight down. So it actually gave straight off the bat. It gave that's 100 points. God, it makes you things like that happen. It makes 30 look stupid, doesn't it? You're one for one. But anyway, I mean, it was good slippage. I got 47 points, I think, on that. So that was a matter of seconds. So who's going to complain? You make it on the strategy, and walk away, and do something with the rest of your day. It's showing more and more consistency as we walk along. So anyone that doesn't know about the strategies, just give me an email, send me an email, and then we can discuss it further. Best bonds I want to talk about. Cool. It's good showing that inflation. It's no longer just transient. I don't think they can't sit on that transient tone all the time. I've got to turn that off. Sorry, I'm just seeing those numbers flicker around again. I'm having, for some reason, the internet is really struggling. All right, let's just keep plugging away. So we'll start with the US dollar. The US dollar here, we've talked about this for quite a while. I think the US dollar is, the funds, there's a lot of funds that are buying into it. Your higher US dollar, we're talking up inflation. They can't get around that. Okay, they can't get around there's going to be rate rises. With inflation ticking above that level, they're going to cool it. Okay, the only way that the Fed Reserve and any reserve has got, any central bank have got, is raising rates. That's how they can control inflation. They've got other government policies, fiscal policies that they can use to stem it, but that's the Fed Reserve. That's their mandate, is to control inflation, and that's where they're using interest rates. So US dollar should be a recipient of rate rises. It should be bullish. And there has been a lot of funds and a lot of bigger players that have been loading up into the US dollar. Yeah, there's some ebbs and flows, and you've got this, buying into here, this squeeze out here. They're saying, oh, they're now closing out those trades. No, they're not. They've got a much bigger position. This is a solid support through here. Okay, let's just get rid of that. I think it's solid support through here. Okay, this is basically what I'm looking at. We've got the market's pressed down. It's retested this zone around 89 or so, and it's been working its way up since then. It's still in a daily uptrend, and the fact that we've just broken up, when we go back down to the 30-minute chart, that to me is a big sell-off there. And everyone was saying, you can read on Raw. Remember, the news only just print stuff. They just printing from day to day, and they can change. They don't care really. But when you're trying to get an outlook of what's happening, you've got to stick to you got to pick an outlook, I guess. You got to pick what could be happening, and if the data and if the movements are supporting that. And for me, the key level was just down at this support zone around the 93.20 to 30. Okay, in the US dollar index, we flushed down, and it proved just to be a flush. I mean, it wasn't looking so great then if you're just looking purely at the 30-minute chart, because we've got a lower high come to play, but then it blasted through. Okay, bonds were easing as well, and that was probably this move down the US dollars more to do with buying into euro than, okay, we're getting out of the US dollar longs. Okay, you got to remember dollar longs. Okay, you got to remember that it is a pair, and one will affect the other. And sometimes it's a US dollar moving. Sometimes, well, most of the time it's US dollar getting traded, and the euro moving in conjunction to that. But other times, I think ECB come out, and it was people trying to figure out what was going on with interest rates in the Europe, and finding that they're still doing really well, as in the EU, ECB are talking up rate rises soon too, so that got a bit of a lift. The euro got a bit of a lift the other session, I think it was Thursday night, which pressured the US dollar down. But when we come out Friday night, and it was the PCE indicator, which is a favoured one for the US Fed Reserve, that's shown that it's above their target. Okay, so if it's continually hovering above their target, there's only so long they can last until they taper. There's only so long they could last, a bit longer. And once they finish, they start tapering and they finish the bond purchases and stuff and the support, they turn the taps off, then you've got to look at rate rises. Okay, and that's what I think the US dollars continually do. Yeah, it's going to flush out, so that you're going to have a bit of a run up, a bit of a pullback, flush out some longs, especially these late longs up here. That anyone that's thinking bigger picture, but trading it on a minor scale, as in they're trading off the 30-minute chart, but they're thinking bigger picture of the US dollars going up. If you think it's the bigger picture, you've got to be wary, or you've got to be prepared for those bigger pullbacks, okay, to flush people out. But generally, I think there's a lot of US dollar bulls out there. There's a lot of bullish movement into the US dollar, because the US dollar is going to do better than the ECB, the euro, than the pound. I think it's just more favoured because of the US. Sorry, another fraud call. So yeah, you can see the fact is that it's punched up through this zone in here, and we've just broken out of that downtrend. So we flushed, brought in some shorts, so trapped some shorts in here, all the way up here, and then squeezed them back out. And that was enough to squeeze them all the way back out and push up through 94. So I think longer term, you're going to remember that that daily chart is up. We've just pulled back. We pulled back into this zone, the bid zone, and we started to punch back up again that out of this contraction. And so when you're going in from contraction to expansion, with a little bit of consolidation thrown in there at different stages. So at the moment, we look like we're going back into expansion. We're expanding higher. So I would expect this leg to take us up and through. Now, that said, that is a bias for rate rises, bias up for rate rises, and bias should be down on the bonds, okay, the US bonds. Now, we're going to look at the US bonds now. Let's just get that. I get that bit bigger. So US bonds, I mean, you've got to be careful. This is, again, be careful what you read. I read somewhere that US bonds went, the yields went up. And when I went and looked at it, yields were down in the US session. They were going up, but it depends of what time of the market they're looking, what time they're, they love to say, and you'll see this more and more. I've seen more news articles come out lately, especially in Australia, because they're talking about the 5s, the 10s, or the 30-year T-bond. But yeah, I think this is kind of the first leg down. We've had a bit of a consolidation through here. We popped up, and then we sold off again. Okay, we look like we're selling off again. Through here, we popped up and then we sold off again. Okay, we look like we're selling off again. I'm still getting issues, guys. So it just looks to me like the stream is not coming through and people are getting kicked off, which is a shame. Yeah. Let me just give me a minute, guys. I'm just going to see what. That's a bit weird. The internet seems fine. Should be good. Okay. So it just seems to be dropping out and then coming back. So we seem to be steady now at the moment. So I'll see people coming back on. Sorry about that, guys, if you're getting kicked out and you're coming back on. It just seems to be there's not too much I can do about it. I might have to, it might be just the OBS is playing up. OBS is the this program here that I use. Yeah, you can see that number down here is kind of steady. That dropping down right to zero, back up and jumping around should be steady above 2,000. All right. So anyway, bond prices I do think are going to start to drift lower. Now they're drifting lower. They're factoring in rate rises. When they're factoring in rate rises, that's the market saying the Feds are wrong. Okay, or they believe the Feds are wrong. Now it's hard because the Fed can do what they want. They don't have to be pressured into the corner by the bonds. But the bonds are um, a pretty affluent kind of a market as compared to crypto, which they're not really affluent. I wouldn't suggest, just being biased, but it's not a big market. It's not a well, what do you call it, an old market. Whereas bonds, basically bond market is probably the hardest and I guess more precise market. If the bonds move, there's a reason, okay? Because they're seeing, bond markets are seeing flows coming in and out, and they understand what that flows mean to the bigger macro picture, okay? Whereas stocks completely, a lot of people, I mean, when they're trading stock, they don't even know what the macro picture is. I remember years ago, some people were saying, why is it important to worry about the macro picture? I mean, you're kidding yourself. If the market wants to head south and we've got a major problem with different things, the market's going to get smashed. And if you don't know that, then, I mean, for example, the ASX 200 took years to get back to new all-time highs when every other market was going to new all-time highs. So if you're not taking into account the bigger macro picture, then you could be suffering on the individual portfolios. So I think bonds really understand the macro picture, and it's good to keep an eye on bonds to see what they're doing. You don't have to give you a lesser return because some of that capital is going back into debt, paying off the debt. Then it's going to crimp it going forward, which means if you're going to factor in what's coming, you would expect a bit of a sell-off because the markets have gone so hard on the back of free money, QE. Now, I guess the Feds are going to be reluctant to turn it off because they probably know what could be coming. I would expect a sell-off. You could argue that economies are strong. Why would it sell off? Because it's been factored in. It's not just this. When that happens, this will happen. It's when this happens, have we've already factored in or not? How much has been factored in? Because the markets always factor in what is coming or what they expect is coming, what the consensus is that's coming. I just feel that when you got things like you look at the Nasdaq, that's a daily chart that's been just powering higher. All free money, we keep pushing that higher. We've had a couple of hiccups along the way, but really it's been really strong. If you start to look at a weekly chart, that's been standard over the last few years since what started 2020. It's just been near vertical move. I mean, that's ridiculous in anyone's terms. So if you like to, I don't want to say live in fairyland and expect that it's not factored in, there's still bigger returns are coming. I don't think so. I think there's a lot of returns and positivity being built up in those shares, and they have been lucky that shares is kind of the only thing to go to. Bonds, funds will buy bonds constantly, and central banks, everyone buys bonds for the yield. It's a safe return. So if you're a big hedge fund or in the US or wherever, buying US debt is the safest thing you can do. Okay, and that's why it's just that it was yielding nothing because they kept pushing. Interest rates were going lower and lower and lower. Now that we're talking up rate rises, and this is what I was talking to someone before. There's two markets. There's your bond market, which is your primary market, and the secondary market where they're traded. The bonds are traded down the track. Now, the primary market is where you buy and sell. People will buy different length bonds, 2 years, 5 years, 10-year bonds, if they think the outlook this is a good interest rate. Now, you don't just, it's not like the way I trade. I'm all in one go. So if I'm trading the Hang Seng, I want to go short. I don't do a partial sell, a partial sell, partial sell. I'll just lob it all in, okay, and then buy it. You don't really do that in bonds. So they could be buying some here as interest rates keep going up down the track because they're longer term. They feel that interest rates are going up. So bond prices should get cheaper. Their yield is going to go up. So they'll buy some, which means that money's coming potentially away from the equity market into the bond market because it's a safer bet. And you've got to compare that with where the equity market is at the moment too. It's at all-time high. It's just smashing along. I mean, yeah, it could go higher, but the likelihood that this could be sustained is very low, in my opinion. And if you're starting to look for safer returns, if you think there's going to be a bit of a pullback, even if you don't think there is, I think your risk reward is starting to skew away from shares and potentially into bonds if they're talking up rate rises. So that's the way I'm viewing things. And that's, when you look at, so let's look at the Dow, same sort of thing. It's been powered higher. The S&P has basically been driven by 4 companies or, just your fangs. We could get some rotation into other stocks, but I just think that when you start to take money away or money that could come into the market, where could it go? Probably very minimal cost of debt. What's going to change? That free money. Okay. So what does that mean? If there's no more free money, and that's what's been sort of driving it higher. Can we keep this up? I don't think so. All right. So remember RBA tomorrow. I think it's at 2:30. Keep an eye on that. Just keep an eye on some bonds. If you don't look at bonds, look at the US dollar. I feel the US dollar starting to head back up again. If you go and look at some currencies, they could all have different opinions. Just by looking at euro, that's heading south. They're heading south because they anticipate the US dollar is heading up. That's on the daily chart. So we're looking at daily charts now, not this minor details. Aussie, I think Aussie could be in a prime position for a short. Let's just get rid of that. Whether we are or not, it's a different story. I mean, the Aussie's been notoriously a risk-on, and commodity-based currency. Now everyone's talking about a commodity boom. If everything's termed in US dollars and US dollars going to go up, if everything's priced in US dollars, commodities as such, and it's US dollars going to go up, then it could weigh on commodity. I mean, they've been wrong. People have been wrong about gold a long time. It's an inflation hedge. Now we're talking inflation for a long time. Nothing's happening with gold. It's getting, just chopped around. So it's interesting to see what could happen with the Aussie. I think that's one, but the euro's linked very much so to the US dollar. And if the US is heading higher, it looks like it's, just looking at that chart on the euro, it's going south. Look at the Aussie. If we're going to start to drive higher in the US dollar, I can't see the Aussie pairing it. I mean, that's going to head south. Might find a bit of it might be buoyed tomorrow if the RBA starts talking up rate rises and rate rises and tapering cuts, all that sort of stuff, QE cuts. It could start to provide some sort of support, but I think that's got to offset some coming US dollar strength. And I think that US dollar strength is going to be a bit more than the Aussie dollar strength, which means that pair grinding lower or getting a head of steam down. Look at the pound also. That's, I've got double up everywhere. The pound to me, that's a leg down. We've had a big corrective move back up. We could be that we're going to at least attack these lows again at 134. We're now at 136. It could be a couple of hundred points on the downside on the pound. Longer term, the pound to me is, we've had this big leg up and we're correcting it. Now the pound is also that they're talking up rate rises because they're talking up rate rises in the UK. BOE talking up rate rises, supportive of the pound, but it has been coming off since, for a while now, a few months now, and every time it gets sort of popped up, it gets knocked back down again. So be interesting to see if there's still some contraction. We start to roll over a bit harder from here. Massive double top, technical double top up there. If we go to let's go to a weekly. If that's kind of the action we've got, we're starting to roll from here. We could easily get, a good leg down on the pound if there's going to be a big leg up on the US dollar. Okay, so we'll just see how we go. Anyway, I'll look at the yen. The yen is a good, let's go to on the daily. Yeah, still having issues, so something we're going to have to figure out for next week and why I'm getting issues. Anyway, that's US yen. I think US yen is starting to look like we're pressuring higher. That's just supporting the theory that the US dollar is going higher. US yen, US dollar rallies, US yen rallies. The only thing is, if it becomes a lot of safe haven buying into the yen, that can offset some of the US dollar strength. But at the moment, there's no real safe haven yen buying because not much is happening. Equities are still going higher, but it's kind of that movement in the US dollars that's pushing this pair higher. All right. If there's any shares you want to take a quick look at, anyone that's still hanging around, sorry about all this, all the issues, but still hanging around, there's something you want to look at, just give me a yell. I don't have my Spark open because it ran out and I forgot to, I didn't bother renewing it this morning and I forgot about the stream. So probably haven't got a lot of, there's just two stocks that I have put out a video on this through Trade the Structure that I did like and I think looked pretty good. Is Dreadmount and what was the other one? Anyway, I can't remember the other one, but we'll figure it out. Let me just find out what the other stock was. Yeah, anyway, not to worry. MCR, all right, we'll do. So it's DRE. There was another one. You can check out the video now. I guess LIT. Thanks, Pete. That was it. I think they look really good, and I've given a good explanation of why. I think this, anyone that knows why I'm trade, and probably what you're seeing as well. Market expands, contracts. All markets go from expansion to contraction. We want to be trading in expansion. We don't want to be trading. We don't want to be trying to pick a bottom when we're contracting off the highs, because you just don't know how far contraction is going to go. How low is this going to go? And especially if I'm not reading too much about the fundamentals, it could keep going down. So until I start to see some sort of basing pattern or start to hold up at a level, and that's primed, to run higher. I don't look at Fibos much, but that's just sort of coming down to 618 or the 50%. It's hovering around that 50% retracement of that leg up. That's primed. And if you look at potentially this one, what would that do? In a very, very similar sort of a pullback. So had run up here, we've gone hanging around that 50% or got down to 61.8% retracement of the leg up, and now we're coming back down again. So we're sort of come heading back up again. Okay, so I feel that these two, it starts to base here. If we start to get something like this is what you'd be yeah, even in here, you could say, as soon as you get something like that and you get primed to move higher, you've got you risk on a break through the top, and you box that up, or what we say box it up. I think most of you know what I mean there. You got your higher low. If the higher low confirms, you box it up, break out through the top, you risk below, and see what happens. So if we can get some sort of higher low in here where it starts to lift up, we get our first pullback at a higher level, it gets soaked up. That's what we want to see. Okay, and LIT, yeah, is the same sort of scenario. Yeah, get out. I don't know how I do that. It scares me when I see that kind of thing pop up. Lithium Australia. That is much the same, but if you look at the weekly, it's kind of, I think, looking really good. If you go back to the weekly, you'll see, to me, that looks really good. You know, run up here, big pullback, made a lower high back in 2017, come back down, and we spent all this time consolidating. Now, that doesn't mean anything until you start to lift again. Okay, and we could easily consolidate, lift, and then drag all the way back down again. Okay, so just because it ran up here doesn't mean that it's going to charge to new all-time highs. Yeah, it could do, but it doesn't mean you should be chasing it up. And that's my feeling anyway. I'm more inclined to see this pullback here. So this is the first sort of time, if you can see the price action previously, where it's starting to consolidate and starting to hold a higher level. Okay, so this to me could easily see a lift up to that high at 26.5, or even up to these highs at 37 and go through, to new highs. Okay, from 13. So if you're looking at it that way, and we're looking for the same price action, go into a daily, we get this same price action off a high, risk on move. We just need to hold a higher low. So we start to hold a higher low. We know buyers are jumping in and they're going to push it for us with any luck. Okay, we'll get on to the other two then. Where you got Pete MYX. Bit of a debacle of a stream today. I'm scared a few people off. Main farmer. I might have that. No, I don't. Why didn't that come up? And what was yours? MCR. Now I do Mincore. I do like that too. The MCR, you've got to just drag it in. At the moment, it's not really proving anything, because if you're just looking at this, is that we've got a base from here. Okay, so it is kind of been a line in the sand before. It could be more, but the fact is we've got this little pop up here in, when was that? April, the start of the year. Big run up here. Now, when it has a bit of a run up and you're expecting higher price, you expect it to run on. You don't expect a pullback like that, because it's not showing any strength. It was like a big run up on the back of news potentially, and it's a bit of a, what you call a pump and dump. They pumped it up, and then someone in the nose sold back into it, got out. But it happens all the time. So that's what you're going to be wary of, that these are not getting pumped up on social media. You're getting this buying into it when it's not really a solid buying. It's just engineered to either do a capital raising, which happens time and time again, especially in the smaller. The smaller, the easier it is to do. You get these cap raises, you go, oh, geez, that come out of nowhere, this rally. What's happening? And then it goes into a trading halt on the highs and say, oh, we're going to raise, it goes from 5 cents to 15, so it triples in price. And it goes into a trading halt, so we're raising it 12 cents or something like that. So you go, okay, that makes a lot of sense, because they don't just rally for nothing. And you should be able to find some sort of news of being building up at the very least. If you're a fundamentalist, we've got a trend up. We know we've got a trend up because it's had news come out. Now, if there's no news and it has this bit of a spike, you've got to be careful. And there's no kind of building fundamental reason why it should be pushing higher. Then to me, it's probably going to be a pump and dump. Now, if it does rally up like that, and then we start to get this easing out like we've seen in other stocks, like you can do a good run up, and then you start to get this kind of a grind lower. That grind lower is not too bad, but then you start to want to see it attack lower highs again, and then maybe it can just start to chop around, but it starts to build a base, okay? And then we come out the other end. That's ideally what we're usually looking at. You want to see expansionary move, contraction, and contraction was basically happens because in a good stock, there's going to be people are trading it. They're getting in early. Okay, they're willing to put their money at risk earlier in the trade because you want to buy when it's unknown, and then, well, you want to buy in the unknown and sell in the known, basically. So when it becomes more of the known, we know it's a rally when we're way up here. So there's less professionals buying it and more people just chasing the market, and now they run out. So as soon as no one's left to buy it when it's so extended, you could think it's a fantastic stock, but generally there's going to be less people wanting to buy it. It starts bringing people who have bought it late getting squeezed out, or people who want to take a profit. There's all manner of different people trading things for different reasons. Okay, you got the investor that might be having it for years. They anticipate it's going to go for a long time. Intraday traders that wanted a short term, short term swing traders that want it, that sort of mid range time frame. But so you've got the market will work its way back down as the short-term ones, maybe the intraday traders that bought up here looking for that next day pop, and they want to get out, and they might not be right, and it starts to work its way back down, so they get out, they're forced out, then they get squeezed out. But it's people taking profits late in the trend, and when it starts to come back into an area where more people think it's valued, they've missed this run up here, but it starts to run out of people that are selling. It starts to flip around the other way. You start to see people going, well, if this is all it's going to pull back to, I don't want to wait for it to start to run higher. You might find that people add, they bought it here, they think it's really good. They're waiting for that first pullback to add, to double up on their position because they think it's great. This might be 5 cents, might be 15. We've come back down to see 7 or 8 cents here. They might be thinking it's going to $1. So they want to start building a position. Okay. And that's why you get this support at higher levels, because it's a quality stock for whatever reason. I don't care, but it's getting held up at a higher level. And then it starts to run up again. And we want to take advantage of it as a momentum trader when we're buying it off that higher low. So that's ideally what we're looking for. Now, that was a long bit of an explanation, but you can see that this is not exhibiting that at the moment. Main. Okay, we've had a bit of a run up, straight back down again. So we're back down into that support. We shouldn't have done that. We should have shown some strength. But instead of having anyone willing to buy it because they think it should be higher, they're sitting on the sidelines doing nothing. So I don't think this is ready to go just yet. I think off this support, yeah, it could be, but it might be short-lived just because we're not seeing that sort of sudden spike higher, and this pullback should have held at a higher level. Then that could have gone on a lot harder. Okay, so don't forget this is still your daily chart. We're holding this higher low, but it could easily be, markets, it's coming to support. You've got run up, pull back, secondary leg up, and we could come slamming down that support. I'm just guessing. I'm not saying that could happen, but that's a possibility because there's no real work done. Okay, this is a higher low, yes, but that wasn't a really, a solid leg up like it was previously. Okay, I would much rather see. Okay, I've not got that there. I'd much rather see this action here. A solid run up here, and then this start to play out when markets might be coming back down to start to show this kind of action and then lift. Okay, that's what I'd be looking for at a higher level after a good run leg up. Now this is nothing, and that leg up's roughly equal to what we've just seen now. Okay, so we could go higher, we may not, but that price action is not supportive of me being too confident in it. Okay, so we'll keep an eye on that one, Pete. Anyway, MCR, finally we can hold up there. Hopefully we hold up here, John, and the explanation is good. Let's get on to, well, that's just an established uptrend, really. Let's go to a weekly first. Oops, bad ticks are killing it. Okay. So we had, even on the weekly, this is good. So we're seeing the market start to hold. It's held off. We pushed above the MA, consolidated these little minor gains, probably not so minor, but pushed up off these lows. So that we've got this double bottom here. It's retested. It's pushed up. This is what you want to see if you want to be trading. Push it up to this previous high in here, consolidates, retests it, comes back down, and it's still consolidating through here. So it's sort of retested this high, consolidating. Okay, we're not going to go down. What it does is trigger more buyers into action. They start to jump in and support the price and start to lift it. We start to lift, come back down, retest the MA, the longer term 200. The 200 is lifting up. The 20 and the 50 are going up as well. So everything's lined up nicely on the weekly. Trend is up. It's what's happening on the daily time frame. Are we too extended on the weekly? Maybe, maybe not. So if you're looking at in the way of legs, that was your leg up, pull back, leg up, pull back, leg up at the moment. So we're in the midst of a leg up on the weekly. It's just can we expect a pullback here, or can we expect a pullback up at $1.75, $1.80? All right, because if it's going to be a nice trend up and it's going to be solid, you're going to expect a pullback. You should expect a pullback because you've got to sit through it. The market just doesn't go up in a straight line. Looking at this is the zone, and we've got this high in place. Okay, so everything, at the moment, it's still looking pretty good. If we start to hold this inside level here, inside level just in here, then I expect it to push up and through $1.44 and just continue its way up. Okay, so it's still looking quite good. And I think if you extrapolate that leg out, if we just mirror that, and you use that as a potential target where we could be going to, look, it could be still, so that $1.65, $1.70 level. So as a breakout, you could potentially, if it just, I'd love to see a little bit more consolidation on that level. Take the break there with your stop just below the higher low, and then see if you get that expansion. It could be a 2-to-1 up to a 64, 65. It could go further than that. That's not a hard and fast rule. It's going there. It could just go, that's a rough target. So if you get there, you're kind of anticipating that things are starting to get a bit extended, and you might be playing a bit more defensive. All right. I'm not sure if you guys are still there, and we're starting to chop around again on the stream, so I might just call it a day there. I really think you guys, anyone that has been listening has managed to stick around. Thanks very much for sticking around. I'm sorry about all the issues with the stream. It might be something on my computer. I might have to just clean out my computer to see. But generally, you're streaming. It's not the computer as such. It's the it could be OBS. The streaming program that's having a bit of an issue. So I'll take a look in that the next week and see if it doesn't sort itself out. But the internet seems to be good. Let's just see where the hang thing is before we go. My favourite. Yeah, not looking crash hot, is it? Let's look at the 5 minute. Yeah, so we had a sell off, still going down, so it's not looking too great on the Hang Seng. All right, anyway, guys, thanks very much. We'll speak to you again next week. I hope you enjoy this week and all the best. And enjoy, if you're in Melbourne, enjoy the day off tomorrow. We had ours, been in Bendigo, had ours, was it Thursday? Wednesday? Can't remember now. I was working at Wednesday it was. So we had the Bendigo Cup Day. They have it off here. They don't have it off Melbourne Cup Day. So it was good fun. Relaxing. I've been working on the pool, renovating the pool, so paving and all that sort of stuff. It's a new experience, but not something you could easily do with Google. It's great. All right, guys. Thank you very much. We'll speak.